Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be answering the two most frequently asked questions. The first one, as per the title of the video, and that is the exact date of the Bitcoin top. So we'll use a particular measure of when the top will be. And secondly, how high can we go with the current bull market? So we'll have a look at what's in the news and what other people are saying, and what one of the indicators that we use is also telling us where the price may well be around that exact date. And as per usual, we'll have a look at the 60-day cycle. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So I'm going to start off with the main theme of the video, and that's asking the question, when will this current bull market end? And we can entirely understand the question because we started the bull market here back at the end of 2022, and since then we've been in this rising market. And we're now getting to the end of the current 4-year cycle. And the questions are going to be raised as to when will this end come and at what price. So this is where we're at on our default chart. So what I'll do is we'll take a particular measure from the previous 3 cycles. The first cycle ended here at the end of 2013. The second one ended at the end of 2017, and the last one ended at the end of 2021. And each of them, as we've seen many times with different measures that we've done, there's certain patterns that seem to follow over and over again. There is a certain measure that we can use here in the first cycle, and we can repeat the same measure in the second cycle, as well as here in the third cycle. So we'll have a look at that particular measure and what that's telling us in terms of where we're going to end up at the end of this bull market. So let's start with this first cycle here, which ended in 2013, and we'll have a look at this on the weekly time frame. So this is the first cycle, which ended here in November 2013. And what we want to do is to measure this particular date where it actually topped out from the previous low in that cycle. So here it is. This was the low of the cycle on the 4th of October 2010. And if you take that across to the end of that bull market, that gave you a measure of 1148. And one thing we have to keep in mind, and we've seen this with the other measures that we've done, when you take into account the first cycle, because this first cycle is far more highly speculative and is less likely to resemble the fourth cycle, which we're in currently, than the second and the third cycle. So this one here, you have to look at as a little bit of an exception, because this is where everything started. And as a result of that, this data point isn't usually the most accurate to take into account. But for the purposes of the record, this is what's happened. It's taken 1148 days from the bottom here to the end of that bull market to give us the top. And if we move on to the second cycle, which ended in December 2017, and the low of that particular cycle was back here in January 2015. So if you take a measure from the bottom here to the end of that cycle, that gives you 1064 days. So remember that, 1064 days for the second cycle, 1148 for the first cycle. And in the last cycle that we had, which ended here at 69,000 at the end of 2021, if we did the same measure from the bottom here, which was in December 2018, to the top, and that gave us the same measure as the second cycle, and that was at 1064 days. So you have 3 data points now, 1148, 1064 and 1064. And as we know that as the market matures in a particular new asset, the recent data points tend to be the most accurate. So I would take the second and the third cycle in particular as much more of an accurate measure of what may happen. And we know with Bitcoin, the same patterns seem to be coming up time and time again. And we know that Bitcoin tends to rhyme rather than repeat. So the idea here is 1064 days seems like a very good ballpark figure of where we could end up at the top of the bull market. So if we use this particular method from the bottom of this current cycle, which was in November 2022, and if we take that across, 1064 days would give us, as you can see down here, the 20th of October. So if the current cycle ends exactly at the same place as the second and the third cycles, we're going to get around about the end of October this year. And if you want to measure 1148 days, that would take it to January 2026. Now, there are people who think that we may well have an extended cycle that goes into January, February, or even March. And that's quite understandable when you look at the pi cycle and the current state it's in. So this particular measure is giving us a date of around about the 20th of October, give or take 14 days, but at least we have some sort of a ballpark figure. And I've done a similar measure in terms of the months. And if you use a slightly different measure using the tops of the cycles, so from the top of the first cycle to the top of the second cycle, it was 49 bars, i.e. 49 months. And then from the second cycle to the third cycle was actually 47 months. So we get a slightly different measure here, 49 and 47 months. And if you use that measure, then what we would get here from the last cycle top at 69,000, then 47 bars would take us to, again, October 2025. So there's a confluence of October there, and 49 months would take us to December 2025. And I've seen other people do these measures, and October seems to be very much in the frame for the end of this current bull market. So let's see what happens here. Now, there is one little snag, because we've been using one of the Bexit indicators, which is the pi cycle, and the current state of the pi cycle is giving us a slightly different picture. So if we put the pi cycle on here, and the assumption is that at the end of the current bull market, as has happened in the previous 3 cycles, but not only in the previous 3 cycles, but in the previous 5 peaks of those cycles. So we had 3 peaks in the first cycle, and then the peak of the second cycle, and the peak of the third cycle. So we had 5 peaks. And the reason why we use the pi cycle as the most accurate measure is because it's predicted every single peak since 2010. So this was the first peak, and it crossed here. The second peak, which crossed exactly at the cross, and the third peak, which was the end of the first cycle, and that's exactly where the pi cycle crossed. So we know that the first 3 peaks within the first cycle all occurred at the cross of the pi cycle. And in the second cycle, the 4th peak crossed here, and the last cycle, it crossed exactly there as well. So we know this is a very accurate measure, but also we know that the prominence of the crosses, i.e. it was a much more of a cross here, and here, and here, but it got progressively less prominent in the last 2 cycles. The main point here is that the 2 lines of the pi cycle should be at least very, very close when we get to the end of this current cycle. And the reason why there's a little bit of a snag here is because the 2 lines of the pi cycle currently are incredibly wide apart. So unless we're going to get some sort of an explosive move with the Bitcoin price action, the green line, although it's actually started to move back up again, as you can see, the curvature is back towards the upside. But the distance it needs to cover in order to complete the cycle in October or even November or December, we would need very much an explosive move to the upside for the green line to come back up sharply to meet the red line. So with October being around about 120 days away, if you look back here where we topped out, and in the previous cycle we've topped out at 64,000 technically, rather than 69,000. So this is where the cross occurred, at the 64,000. If you take 120 days from there, where it topped out, so you can see that 4 months before the cross, the red and the green lines here were very much not that far apart compared to where they are currently. And in the last cycle, we did have quite an explosive move here, as you can see, as the price rose very, very quickly. So this is something that we really need to be aware of, that we should be getting, as per the previous cycles, some sort of an explosive move to come in the coming weeks, if not days. But if the previous cycle is anything to go by, it has to be more of an explosive move than the one that we got in 2020. And that's because the lines are far more apart than they were before. So this needs to be much more of a straight line up from where we are, and that may not happen. And if it doesn't happen, then those people who are predicting the end of the bull market to be in the early part of 2026, then they may well be proved right. So there you have it. October seems to be the most likely month, depending on what measure you use. And what we've seen with the pi cycle is that if the pi cycle is going to play out as it's done previously in terms of predicting the tops of the bull markets, then maybe it's giving us a clue that we are at the start of something that is going to be a massive move to the upside in order for the 2 lines of the pi cycle to meet. And the second part of this question is, how far can the price go up to? And it was interesting that last week I had a look at a particular pattern that seems to be playing out in every single cycle. So we had a look at the inverse head and shoulders that occurred in the first cycle, and we had another inverse head and shoulders in the second cycle. and another one in the third cycle, and currently we have another one here in the fourth cycle, which is this one here. So we have an inverse head and shoulders, and now some people think this is a cup and handle pattern, which is absolutely fine. It's another version of the inverse head and shoulders. And according to this measure, and always remember there's many ways to measure these patterns, and those measures give you a very similar ballpark figure of where we could end up. So it was interesting that in the news currently is this particular prediction of the pattern that we were looking at last week. So we've had the inverse head and shoulders in the first, second and the third cycle, and currently we've got another inverse head and shoulders. But as I say, some people are looking at it as a cup and handle pattern, and their breakout gives them an end price target of 230,000. And that seems quite plausible. So when you have a look at exactly the method they're using for this particular pattern, so if you have a look here, so they're taking a measure from the bodies of the candle, whereas most people would take it from the bottom of the wicks here. So they've taken it from the bottom of the bodies of the candle to the top of the bodies of the candle rather than the top of the wicks. And this is how they've got the measure of 230,000. So if you have a look at the definition of this classical pattern of the cup and handle or the inverse head and shoulders, when you're looking at the target price, what you're looking at is the height of the cup, i.e. the height of the cup is going to be from the bottom to the top of that cup added to the breakout point of the handle. So this is where the handle is going to break out from that neckline. So when it breaks out from here, you add the height from here to the breakout, and that will give you a end target somewhere there. So if we do those two measures, either from the bodies of the candle or from the very bottom to the very top. So this is the actual pattern in the current cycle. We topped out at 69,000. The technical top was the 64,000, and as a result of these 2 points we made this left shoulder. But if you don't want to count that left shoulder, then you're left with this cup and handle pattern over here, and this is the breakout exactly as I've just shown you. So if you take it from the bodies of the candle, so if you take it from the bottom of the bodies of the candle to the bodies at the top, which is up to here, then that gives you around about 270% from the breakout over here. So when it breaks out from the top here, 270%, what they're doing is they're measuring from the tops of the bodies of the candle here. So that 270% from the tops of the bodies of the candle gives you roughly $230,000. But if you measure right from the bottom to the top of the handle part, which formed after this cup and handle pattern, or the right hand shoulder here, as I would put it. So we've got a inverse head and shoulders with the left shoulder and the right shoulder here, or a cup and handle, and the right shoulder becomes the handle part. But that gives you around about 380% from the breakout. And that 380% gives you around about the 350,000. So you've got two targets here from 230 to 350, depending on how you want to measure it. But it's a ballpark figure from around about the 250 to 350, let's call it. And as you know, nobody has a crystal ball. All we've got is certain measures we can use to give you some target prices of what we can expect in a ballpark figure. So I hope you found that useful and interesting. Of the date of the end of the bull market and the likely price target going forward. And those of you who've been watching our videos here at Wisdom Bites will know that I've got this white box here, the bottom of which is around about the 150,000 and the top of that is around about 500. So this is where I would think the odds are going to be anywhere between 150 to 500,000. And really it can be anywhere, depending on what measure you use, it can be anywhere. But the most likely prices from a lot of different analysts seem to be pointing to the direction of anywhere around about the 250 to 350 mark. And another figure that does keep coming up quite a bit is around about the 170,000. And that's really based on, if we do this measure on the monthly time frame with a Fibonacci retracement. So you take it from the 69,000 top here in the last cycle to the bottom here at 15,400, which was the bottom of the bear market. And you can see that there's 61.8, which is always a very good, accurate endpoint for Bitcoin. That's giving you a figure of around about 174,000. So this is where a lot of the analysts are thinking that we could end up here at around about 175. Now, if that was the case, then it's very unlikely that the pi cycle are going to cross, because this wouldn't be very much of an explosive move or a very high move for that to occur. So from the pi cycle point of view, this doesn't seem very likely. and that a higher price seems the most likely, anywhere between 250 and 500. And if you're looking for the next move up from where we are currently, and as I'm doing this video, it's at 108,900, and we're waiting for this breakout of the previous all-time high here at 112,000, then this figure here of 128,000 is the one that I would be expecting for the next move up before we get another consolidation. A bit like this one here. We had a consolidation, then another one here, then consolidation. So the next move up would be around about the 128,000. And that seems to make sense when you look at the price action that we've had around these levels at the 112. So if you do a Fibonacci retracement from these local levels, the local tops and the local bottoms, like from here, we topped out at 109,000 first, then we came back to the bottom here at 74,000, and you can see that once again that 128,000, which is at the 1.414, is giving us some confluence with the last measure I've just done for you. So this seems the most likely place when we have a breakout. It's going to go all the way up there before we have a consolidation prior to the next breakout after that. But if it doesn't stop at the 128, then the 138, maybe 140 is the one that I'd be really looking out for here. Okay, so we'll have a rundown of the various time frames for Bitcoin to see exactly where we are in the current cycle and where we're heading. And as you know, the 80 EMA, the blue line here, is one of our guides for the end of the bull market. Apart from the pi cycle and many of the other indicators I've shown you in the past, the ATMA is one of those Bexit indicators which will give us a guide as to the end of the bull market. And that's really based on that once we recapture it at the end of a bear market, we tend to stay very much above it, although we do fall below it at the early part of the new 4-year cycle. But when it comes to the last year of the bull market, as I've shown you many times before, in the last year of the bull market, it tends to find very strong support all along there until it finally, wherever it's going to be, it breaks out of there, and that will be your confirmation of the end of the bull market. And currently you can see quite clearly that the price action is still well above there. So we're still very much in the upward part of the bull market, because the blue line here is at around about 96,000. So unless we break 96,000 and close a monthly candle, so we're actually quite good to go to much higher levels. The next one to have a look at is the weekly time frame, and the two simple moving averages which are very important on this time frame is the yellow line, which is the 21 simple moving average, and the white line, which is the 50 simple moving average. And you can see why these are very credible, because at the end of the bull market, in the last year especially, you'll find that the price normally finds support on the 21, but when it breaks down from there, then it's the 50 simple moving average that we find support. And we've had that now twice there, and 3 times and 4 times. So we're still good to go. But once you recapture the 21, that's when you can expect the bigger moves to come. So we are really now waiting for some explosive move to take us above the 112,000. And if we have a look at the daily time frame through the eyes of the 60-day cycle, if you've been following this, you'll know that we closed out the previous cycle on day 59. That was the bottom here, and we reached a 4-day high at this point, which was at 110,000, and the expectation was that it would take out the 112,000 at this point. But since then, what we've had is an early mid-cycle decline, which you would normally have got this at this point here. That would have been the expectation. But so far, we have now got past the midpoint, and we did make a new high just before the midpoint. That was a few days ago when it came up to 110,557. So we did break the high of this 4-day high that we had from the beginning of the cycle here. And normally in the midpoint, you do normally get a decline. So we might still be part of this mid-cycle decline before we start to go back up and re-challenge that 112 somewhere in the next few days. So we always need to respect this mid-cycle decline, that we may well be still either consolidating around that time period, or we're getting ready for the big move now, because we have got quite a nice run in the second half of this cycle. So this particular cycle is going to end around about the 4th of August. That'll be your exact 60 days. And the fact that we've consolidated at the higher levels, we haven't broken down below this point here at around about the 106,000. The fact that we're well above those levels is giving us a lot of hope and a higher probability that in this second half of the current cycle, there is a high probability of taking out the 112 and then moving towards that 128,000 target. So we are really in the time band of now making a mid-cycle bottom, wherever that's going to be. We may well have made it there at 107,000. But if you look at the liquidity heat map, that might be giving us a bit of a clue. And in the last video that I showed, somebody mentioned that I'm looking at the wrong part of the liquidity heat map. And what they were referring to was these 2 points here, where you can either click the pair, and if you have a look at the liquidity heat map through those eyes, the top is at 109.9 thousand, and the bottom is around about 107.6 thousand. If you click this one here called symbol, you'll see there's hardly any difference. So I'm not quite sure what the difference between the two are, but the default setting is the pair, and that is also giving you 109.9 thousand at the top and 107.6 at the bottom. So they both give similar readings, and if 107.6 thousand is the lower range, then the chances are that from where we are currently, we may well have a little bit more to go to the downside, to around about the 107,000, before we take off for the big move towards the 128. And I want to move on to this particular chart, and this is the chart between the ETFs of the Bitcoin miners against the Bitcoin price. And this is something that we can really all learn from, because in the recent past, what we've seen so far is that this particular chart is giving you an incredibly strong clue of what happens in the relationship between the Bitcoin miners and the Bitcoin price. And that is that there is a channel, you can see quite clearly, it has a very strong respect for this particular trend line here. And at the bottom, it's got a very strong respect for this. Although we fell below this here, we found support back again at these levels. And I'm sure everybody here will know that as the price of the Bitcoin miners was going down against the Bitcoin price, there was so much negative talk about the Bitcoin miners and the fact that they'd had their day and the ETFs have taken over, etc., etc. And that's absolutely fine. And you can entirely understand people's sentiment, because this is what happens in this market. When people are at this point here, they want to sell their Bitcoin miners. And this is exactly what happened here back in April. But before people make a judgment about the Bitcoin miners down here and actually start selling their Bitcoin miners, if you have a look at this chart, the history tells you that these are not the points where you sell the Bitcoin miners. So when you come to these support lines, the chances are, just like what's happened in the past, this will give you a clue of what's about to happen from this point onwards. And this is exactly what's happened since we bottomed out in April, and having taken into account the views of many people about the Bitcoin miners. Well, since then, from the bottom here to last week's close, we've had a 76% move to the upside. And the chances are it's going to go back up to this white line. Now you'd think that once it gets to the white line, then it may well have to come back down. And that may well be the case. We can't ever dismiss that. However, when you look at the charts, you know that on the fourth or the fifth time, you tend to get a breakout. So we've been up to this trend line 4 times, and this is now the 5th time. So there is quite a high likelihood that the Bitcoin miners are going to outperform the Bitcoin price. There's obviously no guarantees with that, because nobody knows the future. I don't have a crystal ball. All I do is to read the charts and give you a high probability play. So this looks to me like a high probability play to the upside. And so far, those people who want to take an objective view of the Bitcoin miners in relation to the Bitcoin price, rather than a biased view, which you normally get in the comments, if you just put your emotion to the side and just look at the clinical facts of what's happened with the Bitcoin miners in relation to Bitcoin, this is the chart for Marathon. It's a very good representation of the Bitcoin miners, of what's happened in this current cycle. So in the last cycle, if you go back here, where it topped out, just like Bitcoin did at the end of 2017, even though Marathon was not a Bitcoin miner at the time, it actually started mining at this point in August 2020. Where you can see it followed the same trajectory as Bitcoin even before it became a Bitcoin miner. So if you take it from the top here, at the end of the last cycle, this is exactly what happened. Just like Bitcoin, it fell from the end of December 2017 to the end of 2018 here, and this came down by 96%. So these are incredibly volatile stocks, so we always need to be aware of that. And Bitcoin bottomed out around this time at around about 3,100. But with the COVID situation, it fell further from there to another low, which Bitcoin didn't do. This fell further by another 73% from this point here. So those people who would be following the Bitcoin miners would think that this is the end of the world for the Bitcoin miners. And the reason why I want to show you that is because the Bitcoin miners tend to have a cycle within a cycle of the 4-year cycle, and that is in the final year of the bull market, and Marathon started producing Bitcoins here. So if you just take it from that point onwards to the top of the bull market, where it ended, from that bottom, this had risen 40 times, 40x. So that's 4,000% up just from that point. But you certainly wouldn't have thought that. And this is one of the reasons why I say to everybody that you should always wait for the completion of the cycle before you take a definitive view about the Bitcoin miners. They have a real habit of surprising and shocking everybody with the moves. And that's both to the downside as well as to the upside. So in the current cycle where we topped out at $83 at the end of 2021, since then, this is the whole picture now with the Bitcoin miners. Marathon in the bear market came down all the way down to $3.11. So that was a 96% move. So you can see there are clear parallels, what's happened in this current cycle to what happened in the previous cycle. And then at the start of the bull market, we went from $3.11 down here to the last high that we got, which was at around about $34. It actually went up by virtually 10x. So there was a 1,000% increase at the beginning of the current bull market. But since then, and the thing that's really defined the Bitcoin miners, since the Bitcoin ETFs came along, they haven't performed as well. And since that $34, we have been as low as 71% down since then. And obviously, this is what has prompted a lot of people to say, once again, just like at this point, just like at this point, just like at this point, etc., that the miners have had their day. And as we've just seen with that WGMI chart against the Bitcoin price, the miners have already gone up by 70%. And what we're seeing is some sort of a reversal going on here. And so far, in just the last 4 months, the Bitcoin miners have actually risen up to the close of play on Friday by around about 80%. So the question is this rise very similar to what we saw here with the big move to the upside, or around here, and we are coming to the end of the bull market here, just like there. So could this be the big move that we've been waiting for? Only time will tell. And if you're interested in following the story of the Bitcoin miners and where they may well end up, we do run a private member section here at Wisdom Bites, where we do 2 videos a week on a Wednesday and a Friday, as well as we do market updates. And recently, I've been giving the trading levels for the various miners. So the idea was to capture the whole of the current bull market. But because we're taking a fluid and flexible approach to the market, what I've done is to assign 30% of my portfolio to trade one of the Bitcoin miners at certain points between now and the end of the bull market. Now that could be 5 times or 6 times or 7 times, depending on how high the Bitcoin miner goes. So those are the trading levels if you want to follow us on our trades with that Bitcoin miner. So the Bitcoin miner I'm talking about is Marathon. At certain levels here, we're going to be trading with 30% of our portfolio with a view to buying back based on the historical patterns and behavior of this particular miner. And as a member, you'd have a market update every single day, Monday to Friday. At the end of the close of the trading sessions, we have a look at Bitcoin, what's going on in the news. And as we know, information is absolutely key, especially between now and the end of the bull market. So if you want to keep up to date with the Bitcoin news as well as the Bitcoin miners, then this is the kind of thing that we cover here. And if this is something of interest to you, then below any of my videos, you can join the private member section by clicking the join button below any of my videos, as well as in the description box, you'll see that there's a Bitcoin miners membership join link with the red button here. When you click that, and as I mentioned quite often, for the price of 1 coffee per week, which comes to £12.99 per month, so you can have access to daily updates, as well as 2 extra videos per week, covering both Bitcoin and the Bitcoin miners. You can cancel at any time, there's no obligation or any contract, and we've had a growing band of new members for the last many months now. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.